Good afternoon. It's a Friday. It's 12 o'clock. It's the last hour. One of the things that we have is some news on Google.com blocked in China. Now, back in 2010, it caused Google a lot of pain. And they went back and forth and they went back and forth. And just let me tell everyone that there is a name over here called Baidu. Bidu. That is a Chinese internet search engine stock that could possibly do well if history repeats itself. Baidu would go higher after missing its earnings report, based on the fact that as this news gets to circulating, what I will tell the broader people in New York and the hedge fund manager community that I'm well known about is what to do. Look, the articles are here. Facebook, Twitter, and YouTube were all blocked before they attracted more than a small number of users in China. We've argued before that the authorities didn't dare to fully block Gmail since it has too many users already. Fully blocked Google goes much further. Google search is only the second search engine in China after Baidu, but with an online population of more than 500 million, that still leaves it with many millions of daily users, according to Alexia, its top 5 most used website in China. Never before have so many people been affected by a decision to block a website. If Google stays blocked, many more people in China will become aware of the extent of censorship. How will they react? Will there be protests? Check out the reactions by this link right here, and I'll click on it. And here it's written in Chinese. You can see what the Chinese community is thinking about. This is their blog post, and I don't read Chinese, so the thing about it is we do have some Chinese people here that are MMTs that can look at this writings and know exactly what they're saying. So this is a potential headwind, and what my recommendation, as always, when these kinds of things have happened back in year 2010, we simply got out of the name. The name back then, based on the very same type of news here, had a very negative outcome for Google. Yes, Google hit $650 and sold down. Yes, it went up $18 off of the bottom and has now retraced $6 here. What we felt to put on the risk was that these put contracts for 1117 to 670 puts, they were $21.70 on the high. They had closed at 1938, and we started buying these today down here toward the lows, around $9, $9.20. And we're making great money on them, and they can go right back up to these highs very quickly should the news be very negative outcome, and that over the weekend we would not recommend that you be long Google for any reason, not even after the big up move. In fact, selling the calls is exactly what we've been doing all day, is selling into this, why the stock is up here toward the highs. The risk will remain that people who hold it long will have substantial risk until we find out what the latter part of the outcome will be. It can get very nasty. It can get very volatile with the headlines, and it would be very good for this company right here, Baidu, called Baidu. This is the other side of the trade. When this had happened back in year 2010, we were long Baidu. And Baidu went to the moon and just made higher highs than Google had ever seen. So there is a potential good gap that could come of the news. And being long Baidu and short Google would be the pair trade as to what this news may or may not do. However, based on the amount of risk, with those kind of headlines, we're telling you that these put options right here were on sale. They weren't retail at $19 and $21. No, they were not. And remember, they can go right back up very quickly. And we will see what happens throughout the rest of today. Today is an options expiration, and these are the contracts that we purchased wholesale based on that news. But then let us tell you that we went over here and bought 100 of these Baidu 1117 150 calls. These are at their lowest prices ever. They're 5 cents by 8. We purchased these in case there's a gap up. We are willing to take this side of the move. So basically, we're making a lot of money, and we bought 100 of these at 7 cents now. So that's $700 worth of risk. But we're already making a lot of money on this side right now. We can't lose if this doesn't work. Actually, we can cover the cost of that loss if it went to zero, and we have enough profits built in here to cover that and still come out ahead. And once again, we do train our MMTs to take headline news and do pair trade risk management. Once again, I will tell the people in the broader part of the community is I would not run the risk, and I would sell the Google while you have a chance.